with this, viewers, let's move on. And since we also have the AMFI data for the month of January, which was really good, wherein all equity schemes have seen an inflows, and the mid and small schemes have shown a strong inflow for the sixth straight month. But the cherry on the cake was actually the SIP number, which continues to stay near to those record high levels. And for the second straight month, SIP number has been clocked in over 26,000 crore rupees. So strong inflow within the domestic market continues. So let's try and understand and dissect more of these numbers. And for this, we are being joined by Suranjana Borthakur, who is the head of distribution and strategic alliance at Mirae Asset. Hi, Suranjana. Good to be speaking with you. First of all, Suranjana, given the market sell-off in the recent time, there were concerns that maybe some of the investors might fear the market movement right now and even look for some redemptions is what the markets were fearing. But in contrast to that, it's the mid and small schemes that have performed yet again very well. Give us some sense there that your discussions with the different distributors and investors, what's the sentiment on ground, and do you believe this trend is here to stay?
Yeah, I think, thank you. Good afternoon. I think very interesting trends to be seen. First takeaway for us is that, in spite of sharp corrections in the market last month, I think the inflows continue to remain strong in the equity side, and which is actually indicating that the confidence of the investor remains where it was, so which is a positive thing. I think when you look at the overall numbers, I mean, the overall AUM has gone up a little, but I think that is due to liquid funds and the debt side actually beefing up in terms of new inflows coming in. I think overall numbers in the equity side, if you see, it's around 39,000 compared to 41,000 last month in the net flows. But encouraging is that the inflows in large cap and flexi cap, both the categories, if you see large cap from 2,000 crores of net inflows last month has gone up to about 3,000 crores. And if we look at the flexi cap category, that has also gone up from about 4,700 to about 5,600. While you mentioned the small and the mid categories continue to get, I think there's an increase in small cap. Mid cap is more or less flattish. I think that's also a good trend that probably with all the noise in the market, the encouragement remains with the investors and they are looking at the long term. I think focused and ELSS categories have also got some interest from investors, and which is where the amount which is deployed has gone up a little. Sectoral funds, which actually was a little bit of concern in terms of too much of flows going in, I think it's tapered down a little. Last month probably was a very large spike because of some 12 NFOs which happened last month. This month, that number has come down a little to about 9,000 crores because there were 3 NFOs and which have collected about 3,000 crores in this period. But I think when you look at the distributor side, they are also continuing to talk about the the large cap and flexi cap, I believe, are two categories which are being talked about a lot more now. While for a long term, if anybody has an investment which is beyond 3 to 5 years, mid and small cap, as per the risk appetite of the client, should continue to remain in their portfolios is something I also hear. I think in the hybrid category, we saw a spike which was almost double in terms of the inflows and net side. But most of that inflow was because of the arbitrage category, which last month was negative by about 400 crores, which this month is about 4,700 crores of net inflows that have happened, 4,200 crores of inflows. I think gold is again something which is interesting. If you see the gold ETF number has spiked up quite dramatically. That is also to do with possibly the a little bit of apprehension in terms of what is happening in the markets. I think safe haven is something that gets interest in this kind of a market scenario, and probably rightly so. And I think while there was a little bit of knee-jerk reaction with dramatic corrections, but good and encouraging to see that the inflows have not been hit too much.
Okay, so that is encouraging to see. So, Ranjana, hi, this is Nehi also joining in. Just want to get your quick sense on what you've touched upon in terms of the NFOs, the inflows that NFOs have seen have dropped. The one concern that we also were flagging off is the inflows that has come towards the sectoral funds. Do you believe this is only on the back of the dip that we've seen largely in the month of January, which is continuing now? Do you believe it is only on the back of market action that we are seeing weakness in these two categories, or this could sustain a little bit more going ahead as well?
So, sectoral products, if you see, I mean, most of the inflows that have been happening is actually because of the NFOs that have been coming in. And like I said, the month before, if you see, there were about 12 NFOs in the sectoral category, which is why there was a dramatic spike. But this month, if you see that the number of NFOs were lesser, which is three in total, and which is where I think there's been a little bit of semblance there. We also feel that disproportionate allocation towards sectoral products could be something that the investor could be watchful of, because these are satellite products, and we look at sectors from a thematic point of view. We look at it as themes which should be decadal and long term, and which is where you can take a call in your satellite side. What happens in a scenario where there is a disproportionate interest that comes in, that these tend to gravitate towards becoming your core portfolio, which is something that the investor needs to be watchful of. I think in terms of flows, I think SIP number also is an encouraging point, which I didn't mention earlier. I think the fact that it continues to remain above 26,000 for the second month. But I would really request investors also that for SIP flows, please do not look at very short-term returns, or do not look at last 1 year return to invest. When you are committing to SIPs, very important that in these volatile markets, the commitment continues, because you will only buy more, cheaper units at this point in time. Stopping or pausing SIPs at this point can be something which may not play out well for the long-term goal achievement for the investor.
All right, so Ranjana, we do take a note of all the points that you just made. But thank you so much for giving us a sense that what's been happening and where the allocations are being made from the mutual fund side as well, and what's the sentiment on ground. Thank you so much for that.